5, 10, 15 years ago, for the most part, you could rely on global trade. And if you needed a metal, China would happily supply it, and you'd buy it off them, and it would land when you needed it, and you could make the things that you needed. But that is not the case anymore. The global tungsten market is incredibly tight right now, as you can imagine, on the back of these restrictions and bans out of China. When, just sort of very simply put, when the country that mines and supplies 86% of total global supply says we're not going to export any of that outside of our country anymore, you can imagine how tight the market.
You're watching Silver News Daily. Subscribe for more.
They told you silver was boring. They told you it was just another metal. But what happens when the world's biggest exporter suddenly slams the gates shut, cutting off supply to the very industries that need it most? Right now, China is triggering a chain reaction that could send silver prices hurtling toward $150 an ounce, and almost nobody is ready for it. The U.S. military is scrambling. Solar manufacturers are panicking. And silver inventories are vanishing at a speed that has Wall Street quietly terrified. Just last month, a key Chinese export ban stunned global markets. Silicon metal, rare earths, and now silver is being whispered in the same breath. Why? Because China doesn't just mine silver, they refine it, export it, and control the bottleneck. And with the green energy boom devouring supply, the timing couldn't be worse. This isn't just a trade move, it's a geopolitical shockwave, one that could ignite the biggest silver squeeze we've ever seen. So what does this mean for prices? And how close are we to a full-blown silver crisis? Stick with me, because by the end of this, you'll see why $150 silver might not be a fantasy, it might be the new floor.
Yeah, I mean, there's probably lots of factors there, and people better to speak on that than myself. But, the way I see it is the last, call it 4 or 5, maybe 6, 7 years, there's been a lot of easy money in the system. There's been a lot of investors who've gone, oh, well, I can put money in Bitcoin and make, 10, 20%, whatever it is in the time frame that they're looking to invest. So there's been a lot of easy money made in the system. And now I think that has come to a grinding halt. So investors who were sort of looking for higher risk investments that were typically delivering, that is seemed to change, and the tides are changing now. And really, junior mining has been sort of a risk-on investment thesis. So we're seeing now, I think, a rotation from what's been really easy money in the system to investors having to do a lot more sort of hard work and figure out what they want to invest in. So we're seeing a rotation now, I think, just in the last few months alone. And it's great to see because, it's been an unloved sector, absolutely. But it's now, I think, become so abundantly clear to the more generalist investor, I would say, especially when they're hearing about critical metals almost every week from mainstream media, is that these metals really matter. And more importantly, it is incredibly critical for U.S. national security, for, economic prosperity, for general excellence of the country to have domestic sources of these metals. So we're seeing the rotation now. Tungsten is in our view, one of the more critical metals right now because of those export restrictions and bans out of China, because of the need of that metal in the defense sector, along with a lot of other really important developing and sort of high-tech technologies like nuclear fusion, and, like I said, data centers and solar, wind. I mean, there's a tungsten component to pretty much all those different industries. So the U.S. has no domestic mine production. They rely on, or have formerly relied on, China for the majority of their imports, and now they can't. So a lot of eyes are turning to companies like, Perpetual Resources is a good example in the antimony space, and we've seen them perform exceptionally well. MP Materials is a good example on the rare earth side. These are two companies with projects in the U.S. focused on key input defense metals for national security. And once again, tungsten is in that same boat. It's needed for U.S. defense, national security, a lot of other important industries. So we've positioned ourselves as the leader in U.S. tungsten. And now we're starting to see a lot more interest from mainstream media and U.S. retail and institutional investors say, hey, we've seen what has happened in the rare earth and antimony space and what the underlying equities have done. You're the de facto leader in U.S. tungsten. And we're seeing the same sort of story start to unfold. Just in terms of how I reference it also, antimony has had an export ban in effect for, I think, over a year now. The price has gone up over 4x. The underlying equities have performed exceptionally well. the antimony space might be in the 6th or 7th inning. I think there's still a lot of room to grow there in the antimony space. But tungsten, we just got the export restriction announcement out of China February 4th. So we're only 1 month out right now. So we're sort of in the first inning here in the tungsten space, but we've seen the ball game play out in antimony and rare earths. So we're positioned really perfectly here, and we're excited to see how this unfolds. But our job and our main mandate is to be a big part of the solution for U.S. domestic tungsten. So we're focused on just pushing those projects forward as quickly as we can.
China isn't just a player in the silver market. It's the puppet master. While the world obsesses over mining output, few realize that over 2/3 of the world's silver refining capacity sits in Chinese hands. It's not the raw ore that matters. It's the finished industrial-grade silver that powers everything from solar panels to missile guidance systems. And now, in a chilling escalation of its economic warfare playbook, China is threatening to lock that supply behind its borders. Think about it. In July, they hit the world with a gallium and germanium export ban, targeting the West's semiconductor ambitions. Analysts scoffed until prices soared and governments scrambled. Now silver's on the radar, and the implications are even more severe. Unlike other critical metals, silver isn't stockpiled in bulk by governments. It's used up, burned in circuit boards, dissolved in solar cells, embedded in tech with no chance of recycling. If Beijing cuts exports or even hints at a restriction, the global supply chain grinds to a halt. And who gets hit first? The very countries pushing hardest for clean energy and military modernization. The U.S., already dependent on Chinese refining, finds itself exposed. And with silver prices rising, strategic stockpiles look more like relics of the past than a shield for the future.
Yeah, you nailed it there. And I think that's another reason why the tungsten space is differentiated from a lot of these other key rare and defense metals, is the fact that the downstream capacity exists in the US. So like you mentioned, even if you mine rare earths, so you mine antimony in the US, one of the challenges is to actually take that concentrate and turn it into usable products for the military or for any other industries. A lot of that material, and in some cases all of it, has to go to China because all the refining capacity exists there and none exists in the US. So the reason tungsten is so different is that we can actually mine a tungsten concentrate on US soil from our projects once they're in production. That concentrate can then get moved from our sites in Nevada to our LOI offtake partners, GTP. They have what's called an APT plant in Towanda, Pennsylvania. And there they can there's a chemical process to turn that concentrate into usable tungsten products, tungsten carbides, tungsten oxides, APT, the downstream products, which then can be used to convert into things needed for the military, like munitions and tank armors and you name it. So that's very different. And that means that there's a fully circular supply chain that can exist for tungsten, and it never has to leave U.S. soil as long as we have a domestic mine source, which is what we are focused on at Guardian Metal. So when it comes to timelines, as I mentioned, our goal is to push these projects forward as quickly as we can. We're in a position where we believe both of our projects can be in production before Trump leaves office. But in terms of getting to production even quicker, we've acquired another project recently called Tempayu, which, as I mentioned, was the largest tungsten mine in the 1980s. The reason that project is of interest is because, number one, there's existing infrastructure on site. So we have, the mill site, we have the substation, we have a concentrate loadout base. Everything has been evaluated by the engineers. It's in good shape. We can reuse it for future development. But also that project is located on what is called patented or private mining claims, which means the amount of permitting you need to do to get into production is a lot less than if you're on federal lands. So that project means that we can move forward very quickly because of the infrastructure and the type of claims that are there. The other thing just to note there, and we're just doing the work on this now, so we need to kind of prove this up, but there's existing stockpiles from the 1980s mine that were not processed. So we're looking at evaluating how much material is there, the grades of that material. But our goal is to find a way to get producing tungsten units in the US as quickly as we can. So we're going through the normal permitting process for the main commercial operations at both of these projects, but then looking at other opportunities with it at Tempe Ute. And there's also tailings there as well, which we're doing some work on to say, hey, we could actually potentially start producing tungsten units sooner. And this is the timeline. So there'll be more information about that out in the coming weeks and months. But we're looking to produce units as quickly as we possibly can. We have a whole team of engineers looking at exactly that right now.
The green energy revolution is here, and it's built on silver. Solar panels, electric vehicles, energy-efficient infrastructure. Every pillar of this transformation demands silver. And demand is skyrocketing at a pace the market simply cannot match. In 2023 alone, over 140 million ounces of silver were consumed by the solar industry, setting a record that's already expected to be shattered this year. Governments around the globe are funneling billions into net zero pledges, and that means more panels, more grids, more silver. But here's the catch. Silver isn't just helpful in solar production, it's irreplaceable. No other metal matches its conductivity and reliability in photovoltaic cells, and with next-gen solar tech like TOPCon and heterojunction cells rolling out, silver usage per panel is going up, not down. The math is brutal. You need more silver per unit, but mining production is barely growing. That disconnect is turning the solar boom from a bullish catalyst into a full-blown crisis for supply. The more we chase clean energy, the faster we accelerate the silver squeeze. And this isn't a future problem. It's unfolding in real time. Projects are already being delayed due to tight supply. Manufacturers are locking in long-term contracts just to stay afloat. And every ounce that disappears into a rooftop or solar farm isn't coming back. This isn't hype. It's demand on a collision course with reality.
Yeah, and just to touch on the first point you made there, I mean, you nailed it, which is, 5, 10, 15 years ago, for the most part, you could rely on global trade. And if you needed a metal, China would happily supply it and you'd buy it off them and it would land when you need it and you could make the things that you needed. But that is not the case anymore. That is absolutely not the case anymore. We're seeing very restrictive export policies coming out of China now. The global tungsten market is incredibly tight right now, as you can imagine, on the back of these restrictions and bans out of China. When, just sort of very simply put, when the country that mines and supplies 86% of total global supply says, we're not going to export any of that outside of our country anymore, you can imagine how tight the market gets. But yeah, so how does that affect us? I mean, I've mentioned our position in the US, so just as a quick kind of outline of what we're doing. So we are Guardian Metal Resources, and we own 2 significant tungsten deposits located in the very mining-friendly state of Nevada. One of those assets hosts the largest undeveloped tungsten deposit in the US, and the other deposit or project we own was formerly the largest operating tungsten mine in North America in the 1980s. So 2 significant deposits in Nevada, trying to push those projects forward as quickly as possible, because if the US has a domestic mine source of tungsten, which we can provide from our 2 projects, obviously the trade war is still going to affect a lot of other metals and inputs and things like that. But effectively, we can help be a huge part of the solution for tungsten. Because if you have 2 operating mines in Nevada producing tungsten for U.S. industry, that really is a big part of the solution. So what do we see now? As I mentioned, just the fact that the new administration is talking about critical metals and tungsten explicitly over the last, it's about 2 months since the new president took office. I think it's important because it's shedding a light on how important these critical metals are, and the fact that we can't rely on countries like China or Russia or North Korea for these inputs anymore. So that's an important part of what we're seeing, just sort of the general exposure. But more importantly is what is actually happening. And
silver isn't just a green metal. It's a war metal. Inside every smart missile, advanced drone, and encrypted communication system lies one critical, irreplaceable component: silver. Its unmatched conductivity and resistance to corrosion make it essential to military technology. And as global tensions heat up from Eastern Europe to the South China Sea, the demand for military-grade silver is rising fast. But here's the twist no one saw coming. The U.S. military is now competing with the solar industry for the same shrinking silver supply. And with China threatening to choke exports, Pentagon insiders are reportedly warning of strategic vulnerabilities. Some defense analysts are even calling for emergency mining operations, opening up decommissioned sites, subsidizing domestic production, and fast-tracking approvals for new exploration. Meanwhile, tech manufacturers are lobbying for federal stockpiles to be refilled with whispers of a national silver reserve program quietly floating through Washington. The stakes are enormous. If silver becomes scarce, it's not just about rising prices, it's about national security. The military-industrial complex can't afford to be left without silver, and neither can the private sector. For the first time in decades, industries that rarely acknowledged each other are now in direct competition. And when governments start stockpiling the same metal as corporations, one thing is certain: supply won't be enough.
One, there's now, I believe, 45% tariffs on any Chinese tungsten imports into the US. But probably much more important than that is the fact that as of February 4th, China announced restrictions, and what I'm hearing now is effectively a full ban of all tungsten exports from China to the US plus everyone else in the world. So we're seeing now, and if your listeners are familiar with the antimony story, that's exactly what happened in antimony, over a year ago. Was China announced an actual outright export ban of that metal, and the price of that metal has gone up materially, and there's obviously been a huge push for, supporting domestic US-based projects to try to have this metal mined on US soil. So now we're seeing the exact same things happen in tungsten. The market is incredibly tight. And probably the most important thing is we at Guardian Metal Resources have positioned ourselves as the leader in US focused tungsten exploration and development. So tungsten is important because of all these sort of trade factors I mentioned. But the reason why it's so important and critical is the fact that it's a key input metal for the defense sector. And in particular, if you want to produce munitions, then there's a long list of different munitions that require tungsten because it's very high melting point metal, and it's also incredibly dense. So if you don't have access to tungsten, the U.S. military, when it wants to build munitions, tank armors, it's used in fighter jets. That's just a small portion. It's also used in nuclear fusion and solar and wind and data centers, you name it. But right now, more than ever, the U.S. needs a domestic mine source, and us at Guardian as the leader are trying to push forward our projects in the U.S. as quickly as we can to provide a safe domestic source of that metal for the U.S. military, but also all the other industries that require this very important metal.
Silver production isn't just lagging, it's collapsing under the weight of demand. For 4 consecutive years, the world has faced a silver deficit, and 2024 is shaping up to be the worst yet. Global mining output is stagnant, hovering around 820 million ounces annually, while industrial demand alone is set to surpass 1.2 billion ounces. That's not just a shortfall, it's a supply cliff. The problem goes deeper than surface numbers. Ore grades are declining, especially in major producers like Peru and Mexico, meaning more rock has to be moved to yield less silver. Add to that the rising costs of energy, labor shortages, and tightening environmental regulations, and you have a recipe for restricted output with no relief in sight. And here's what makes it even more dangerous. New silver mines take over a decade to become operational. So even if prices explode tomorrow, the supply response will be glacial. Meanwhile, recycling isn't riding in to save the day. Unlike gold, much of the silver used in electronics and solar panels is lost forever, unrecoverable at scale. So while headlines talk about silver as a volatile commodity, the reality is much more sobering. We're burning through a finite resource faster than it can be replaced. Investors see it. Manufacturers see it. Even governments are beginning to see it. But the general public? Still asleep at the wheel, just as the shortage becomes irreversible.
How are things changing to support companies like Guardian? And you mentioned executive orders. We've seen, I think, about 3 now, which are very targeted at domestic production of critical and defense metals. And in particular, one that came out about 2 weeks ago was very hyper-focused on speeding projects on U.S. soil up and also directing and redirecting federal funds to these projects. Because, we need domestic tungsten now, not 10 years from now. So the government is really now kind of stepping up and looking at ways to support companies like Guardian Metal. And it's so important because, these tailwinds 4 or 5 years ago, even 2 years ago, didn't exist. And as you know, in this industry, Doug, again, it's all about timing, right? It's all about how these tailwinds can all come together at the right time to support important projects and companies like ours. So we're kind of waiting for a bit more detail on how this all plays out, but we're hearing how the new administration is very much pushing permitting reform, almost you could call it, which is, hey, we've made it very difficult to permit and get projects into production on US soil. How can we streamline that process? And our company, as we have 2 projects that are going through those processes now, can be very beneficial for us, but also the need to allocate federal funds to these projects as well. Because if we can tap into non-dilutive funding through the US government, it means we can just focus on moving really, really fast. So it's still early days here. I mean, it's all kind of shaking out now, and there's a lot of moving parts right now, but we think we're positioned really, really well. The tungsten market is incredibly tight. It's been one of the kind of the focal metals as this trade war has unfolded. And obviously with everything going on with the tariffs and all the announcements over the last few days, it's become even more important that companies like Guardian, especially on the tungsten front, we push forward and just crack on with getting these projects as close to production and into production as quickly as we possibly can, and looking at tapping into government resources and tailwinds to help us get there as efficiently and time effectively as possible.
Now throw geopolitics into the mix, and the silver crisis takes on a whole new level of volatility. The last 5 years have seen an escalating breakdown of global supply chains. First it was tariffs, then a pandemic, then war. Each shock revealed just how fragile our interconnected world truly is. And silver, like so many critical resources, is caught in the crossfire. China and the United States are no longer just economic rivals. They're adversaries in a growing trade war, where commodities, our weapons, and supply chains are battlegrounds. When China slaps export controls on metals like gallium and germanium, it's not just an economic move, it's a message. And silver could easily be next. According to a comprehensive review on geopolitical disruptions, supply chain resilience now depends on regionalization and technological decentralization. But those fixes take time, and silver doesn't wait. The U.S. is particularly vulnerable because it imports over 70% of its silver supply, with a large chunk of that refined in China. That's a single point of failure, and a highly strategic one. Add in Russia's ongoing war, sanctions cutting off eastern trade routes, and rising instability across South America, home to major silver reserves. And it becomes clear that supply isn't just about geology. It's about diplomacy, military positioning, and global strategy. In this environment, silver isn't just undervalued, it's under threat. And when geopolitics strangles availability, markets don't ease up, they erupt.
Yeah, no, I mean, it's really interesting that, again, since we spoke last, and since the new administration came into power January 20th, it almost feels as though we're hearing about critical metals every day, or at least every week. So certainly I think it's a topic that is now starting to reach a lot of more generalist investors, and they're probably wondering, why are we hearing about critical metals so often? What are they, and why do they matter? And I think a big part of that is, as we're seeing today, as this sort of global trade war continues to sort of motor on, it has become abundantly clear that, the U.S. as the kind of global superpower needs safe domestic sources of a whole list of critical metals. Because if you don't have those metals, those key inputs, then a lot of these high important technologies and defense and you name it, they can't operate. They can't manufacture the things that they need. And kind of where I'm going with this is tungsten is a metal where China, for many, many decades, has controlled total global supply. And right now, as we speak, it's about 86% of total global supply comes from China. And if you look down the list of other major producers of tungsten, you have North Korea and Russia also in the top five. So taking those three countries combined, you're at almost 90% of total global mine supply of tungsten coming from those countries. And the important kind of data point to add on top of that is the fact that the US has zero domestic mine supply. So it's a net importer of that metal. And obviously right now, I would say probably now more than ever, or at least in multiple decades, has the importance of having safe domestic sources of these metals become so important. It's probably as critical as it's ever been, because what we're seeing now is
While the physical silver market tightens, a storm is also brewing in the financial arena, one that could detonate the price far beyond anything fundamentals alone would dictate. It's the beginning of what many are calling the Great Silver Short Squeeze. For years, bullion banks and institutional players have been sitting on massive short positions, quietly suppressing silver's price by flooding the paper markets with contracts that have little to no physical backing. But as physical supply dries up and delivery demands increase, this entire house of cards is shaking. The COMEX, the central hub for silver futures trading, is showing alarming signs. Registered inventories are plummeting, down over 70% from their peak, and open interest remains elevated, meaning more contracts are being traded than there's silver available for delivery. That's not just a red flag. It's a countdown. Retail investors watching this unfold are beginning to move. The Reddit-fueled silver squeeze of 2021 was just the prelude. This time, it's smarter, more coordinated, and backed by fundamentals that simply cannot be ignored. Some hedge funds are quietly increasing long exposure, while premiums on physical silver coins and bars are surging well beyond spot prices. And here's the kicker. When this squeeze breaks, it won't just be a spike. It could be a reset. Because once confidence in paper silver vanishes, the market will be forced to reprice based on real-world scarcity. And that repricing? It could make 150 silver look conservative.
Yeah, I mean, I think what differentiates us is our position in the U.S. There's a few other, I mean, obviously China dominates the market, but there's a few other tungsten, North American traded tungsten companies out there, but their projects are not in the U.S. Their projects in South Korea, Canada, Australia. And I think right now what we're seeing is a huge impetus on mined in America, made in America above anything else. So if you care about mines in America tungsten, that's why we are positioned differently than every other company. This didn't happen overnight. We didn't just hop on the tungsten kind of bandwagon and say, hey, we're the tungsten company. We acquired Pilot Mountain, which is believed to host the largest tungsten deposit in the US over 4 years ago. Before anyone was talking about tungsten, we took a contrarian view. We understood that China dominated the market. We understand how important that metal was for defense and a lot of other sectors. And we bought that asset 100%. We've been pushing it forward. And now it's been a lot of hard work and a lot of hard yards trying to get people to care, but now they're really starting to care. So what sets us apart is we are focused on mines in America tungsten. And there's very few other companies who can say the same thing. And once again, because we positioned ourselves 4 years ago, we've been able to acquire the key assets in the US, but also establish key relationships, including an offtake that we have, LOI offtake, with a company called Global Tungsten Powders, which is the largest tungsten processing company outside of China. So we've really firmly established ourselves as the de facto leader in US tungsten. And now as people wake up to what's happening here in the tungsten space and seeing the similarities between this and rare earths and antimony, going, hey, this is a company that's actually really interested and they've done a good job to position themselves. And we're seeing kind of all the stars aligning, which once again, as I mentioned, timing and kind of how all these things come together is so important in this space. So we found ourselves exploring for the right metal, tungsten, at the right time during a global trade war, at the right place in the US, and more importantly, in Nevada, which is one of the best places in the entire world to explore, develop, and mine for these metals.
Everything is converging. Geopolitical fractures, industrial frenzy, dwindling mine output, and financial market fragility. This isn't just a bullish case for silver. It's a seismic setup, one that could send silver erupting past its all-time high and deep into uncharted territory. China's export bans were the spark, but the explosion is being fueled by forces far more powerful: a global transition to green energy, military rearmament, and a collapsing illusion of supply stability. As governments scramble to secure critical materials and institutional shorts teeter on the edge, the price suppression era is running out of time. What comes next could be violent, fast, and irreversible. For the smart money, this moment isn't about speculation, it's about preparation. The next silver spike may not offer second chances, so stay alert, subscribe for the latest market insights, and remember, this is not financial advice. Always speak to a professional before making any investment decisions.